Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. Darden Restaurants, ticker symbol DRI. It stumbled a bit with its Q2 earnings report this morning. The company reported decent results, but the upside it achieved in Q2 was smaller than that of each of the past 3 quarters. Also, its fiscal year 22 EPS guidance was a bit underwhelming, even though DRI did increase its revenue and comparable sales guidance. If all of that was not enough, Darden also unveiled a change at the top by naming a new CEO. That's right, this sudden change of leadership at the top, but it may not be as big as one might think. There is a lot to unpack here for this casual restaurant chain. Its primary banners are Olive Garden and Longhorn Steakhouse, but it also has some smaller chains as well. In fairness, DRI reported upside for both EPS and revenue in this quarter. That upside just did not That upside just did not live up to the blowout results the company posted in each of the past 3 quarters. I nevertheless take that result as a win, given peer Brinkers, ticker symbol EAT, its recent huge miss. So this wasn't really that bad for DIR. Investors seem troubled by the fiscal year 22 guidance, which is below estimates. The company actually increased the lower end of its EPS guidance to $7.35 to $7.60. That's up from $7.25 to $7.60. So they raised their lower end of their EPS guidance by 10 cents. However, analyst estimates that its target should be above $7.60. DRI tends to give conservative guidance, and I think that's why analyst numbers exceeded the company's guidance. Investors likely are concerned that DRI did not raise guidance, but in light of inflation and uncertainty surrounding the Omicron variant, it's probably prudent that the company did not. Same restaurant sales are a closely watched metric, and not surprisingly, DRI saw huge comps in all banners after lapping partial closures last year. Considering comps were up 34.4%, granted, that's down from 47.5% comps in August quarter and 90.4% comps in May's quarter. But that was to be expected as the pandemic closures eased in summer and fall of 2020 and curbside service picked up. Comps were quite strong across all banners, including up 29.3% growth for Olive Garden and 31.2% growth for Longhorn Steakhouse. On the positive side, DRI did raise full-year comp guidance for the second time in as many quarters, now at 29 to 31%. Up from prior guidance of 27 to 30%. That is pretty impressive considering all that remains unknown with the Omicron variant. The CEO change may be causing some uneasiness as well, given the success that DRI has realized over the past 7 years with Eugene Lee Jr. as CEO. He's going to retire as CEO on May 29th. However, DRI named a long-time insider, Ricardo Cardenas, as his successor. So I do not expect the transition to yield a lot of change. He began his career with Darden as an hourly team member in 1984 and has held various executive roles at the company, including CFO. He's currently COO. Bottom line, DRI had a decent earnings report, but it was not on par with the blowouts I have been accustomed to in recent quarters. Also, investors seem a bit let down by the EPS guidance. However, DRI is facing what it describes as the toughest inflationary environment it has seen in years for both commodities and labor. For that reason, I am a little concerned about the EPS guidance, especially considering its huge miss. Also, DRI raised its revenue and comp guidance despite the Omicron variant emerging. So it's not all bad. Finally, because the new CEO is a longtime insider, I view the transition as a relative non event. Perhaps investors had been hoping for an outsider that might come in to provide a fresh look. But why fix something that's not broken? It's a great adage, isn't it? Let me know what you think about this CEO change. Do you think Darden Restaurants should have went with an outsider to come in, ruffle up the feathers, and change the company? Or do you think keeping the ship on a nice and steady path that it's been on for years was the right call by hiring an insider, someone who started at the company as an hourly restaurant employee? Let me know what you think about that in the comments. Now, the restaurant industry is moved mainly by headline news, right? When there's news of COVID, the stock falls. When there's news of reopening, the stock goes up. And you can see the end of last year is that rally. As we thought we were getting out of this pandemic, the stock rose. Then we get to 2021, and the stock started to move sideways. And it really became range bound. And I'm going to put a bottom and top. I'm going to call it 135 is the bottom. And to get to the top, we really got two. It's right about 150. That's a really tight range there. We could take it up, maybe to 155. That would capture three more of the peaks where it comes out of the top, like right here on the beginning of September. But then this real big one here, but that was off of earnings. And then, of course, it fell right back down after earnings. Let's get these lines on here, the vertical lines, to show when earnings were reported. That helps to let us see what happens in between earnings and what the moves are during earnings. So we can see that usually during earnings, it reacts in a positive way, especially the last earnings. This one, not so much. The last one, it had a gap up right out of this range. The one before that, a small gap up. And then the one before that, it also had a small gap up and then a pretty big run there of 8%. And then another 3% the very next day. So this thing can move on earnings. Thank you for watching this segment from the After Hours Show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.